Banks have finally woken up from their slumber. The banking index, which was a big laggard, for the majority of the year, has given returns of about 8%. Now, we have not seen these kind of returns for full year, let alone a month. Now, do you expect this outperformance to continue given that FIIs are back and back with a bang?
Yeah, Suyash, the outperformance can be continued. The main reason is for FPIs, Indian banking and financial services is one of the main key theme for Indian markets are concerned. It offers a very good franchising model. It offers a strong growth prospects for Indian economy. If anyone want to have a pie of India's growth story means it reflects in the banking and financial services. And we have a great franchising models as you are mentioning, like HDFC Bank, ICICI Bank. These are the business. They have a strong, robust business models in India. For that matter, State Bank of India also. So banks are perceived to be the growth centers of any economy. That's the reason when the FPIs comes vigorously into the Indian markets, the first and foremost sector to consider is banking and financial services. And these are large cap stocks. That's the large cap stocks, and we can see the outperformance in these banking and financial services stocks as the FIIs are coming back to the Indian markets.
Bhatini, now amongst these banks, the FPI portfolio increase has been maximum in two major banks. One is HDFC, the other one is IDFC First Bank. With respect to certain banks, it has actually gone down despite their performance, that is ICICI Bank. What do you make of these two banks? Are these the ones that investors should look at more closely now, especially IDFC Bank, which has been under the radar, not in the same league as the others?
Yeah, IDFC Bank is concerned. It's now budding emerging bank in the mid-sized segment. They're quite aggressive in terms of their loan book, in terms of their cards business, consumer lending is concerned. So some kind of interest has been shown by the FPIs in terms of buying these banks in the past 6 months. And the big boy from India, always HDFC Bank is the all-time favorite for FPIs all these years. Now they are showing the keenness because of the relative valuations of HDFC Bank is concerned. We can see some kind of activity. But just to, for the matter of fact, just to ponder, when the FPIs have been going back out of India in the past 1.5 year, what we can see is the quantum of FPI holdings have came down drastically. Names like HDFC Bank and all. So now we can see a complete reversal as the growth is coming back and FPIs have been focused on Indian markets. This is the reason we can see some kind of heightened activity in the past fortnight, from the past fortnight and past 20 trading sessions in these banks.
Right, Kranti, as we speak, DOMS Industries has made a stellar debut on the bourses, listing at rupees 1400 per share on both NSE and BSE. Now, this is a 77% premium compared to the IPO price of about 790 rupees a share, and it's also ahead of the expectation. I think the market was pegging the listing premium to be of about 60 to 65%. We have opened about 77% higher. What's your advice to investors about DOMS Industries? Should they, at least the ones who got the allotment, should they hold on to the stock for long-term gains or perhaps book some profits now?
So if the investors invested for this stock just for the listing gains, 77% in just few minutes after listing is fabulous gains. So if I am the investor, I would like to tend to take some profit from the table. And if I'm a long-term investor also, still 77% is a stellar listing gains. I tend to take some profit from the table, and we'll see the next quarterly results, and we'll take the review of the earnings and take a call for a serious long-term investment is concerned. But at this market juncture, taking some profits from the table is the right thing to do, in my opinion.
And what about investors who are not allotted shares? If they are looking to enter this stock, should they wait, maybe take some positions, build on to, positions in a staggered manner?
There is no need to chase these stocks at this point of time, Suyash. Uh, just wait for a while. There will be a cooling off. That's what we witnessed in the recent IPOs, even with the fact with Tata Technologies also. Post listing couple of days, there is a stellar rally and there is a cool off period. So we can see completely reversal for names like Ereda also. There was a cool off and from there the stock picked up. So clients need to be, investors need to be on their toes, just observing the developments, what kind of sector they represent and what is the relative valuations and market caps of these companies. These are extremely crucial. But Suyash, next couple of quarters for all these stellar listing IPOs, okay, understanding their business models and understanding their relative returns is extremely crucial for the investors. They can't just buy these stocks and be in a sleeping mode. One need to track actually the quarterly results of these companies and cash flows of these companies.
All right. And, Kranti, talking about markets being at all-time high, what's the mindset of the clients that you have been talking to? Are they using these rallies to build a long-term portfolio, something that they'll hold on to for the next 5-10 years? Or are they using it to book profits?
It's a mixed, Shreya. There are people who are booking profit. There are new investors who are entering at these levels also. So it's a mixed bagger at this point of time. That's what the beauty of this bull market at this point of time. But one thing, Shreya, in these markets, what we can see is the sentiment is completely positive and the liquidity is enormous in this, ample liquidity is there, enormous liquidity is there in these markets. That's what fueling the market at this point of time. After reaching 21,500 levels also, we can see follow-on buying that's taking place in the markets at this point of time.
All right. Now, Kranti, another stock has listed. In fact, India Shelter has listed at a premium of about 26% at 620 rupees per share versus the issue price of 493. Any view on India Shelter?
Uh, Suyash, you have a very busy job to cover all these IPOs and telecast at this point of time. That kind of exuberance, what we are witnessing in these IPOs right now. Suyash, what I will do can see is just wait for the company's prices to settle down some point of time, and many of the investors who are coming in these IPOs are predominantly looking for listing gains. So once the cool off is done, we have welcomed these new business models. There is ample paper and new business models are coming to the markets. I'll wait for any IPO that lists on the exchanges. We try to understand the business model first, and uh, and we try to gauge the at least 1 2 quarter results post IPO to take a serious investment decision here. Till the time, all these positions can be a trading positions for us, and I believe in most of the cases for the investors also.
Mr. Bhatini, here's a story that we have been covering. Even yesterday, we spoke about it. The Houthi militants, after their attacks on the ship, British Petroleum became the first oil company to halt all the routes via the Suez Canal, and they are going all around. Brent crude is up at 17 over $79. WTI is up almost 1% at 73. Do you expect oil prices to continue to rise, or is it just a blip?
What I believe is it's just a blip for a shorter period of time. We expect the oil prices to consolidate. We can expect the oil prices. It might go up in next couple of weeks, but on a medium to long term view, we expect the oil prices to consolidate, and we can expect the oil prices coming to the range of $80 per barrel. This is what the level we are expecting at this point of time. Uh, but what we can see is it is a temporary blip, but we need to see how the developments are going to take place. At least it might take, we can see some kind of spikes, sudden spikes in oil for the next at least a fortnight. From there onwards, we can see some kind of consolidation in the oil prices. But right now, what we can see is we can expect some kind of heightened activity with respect to oil prices are concerned in a short term to medium term.
All right, that's the view on oil. But Kranti, before we let you go, what would be your advice for retail investors stepping into 2024? Because we have a lot of binary events. The biggest, of course, being the general elections of 2024, and then we have a lot of positives coming in by the name of rate cuts from both India and US. So, what would be your advice to retail investors for the year 2024?
Yeah, Suyash, you nailed it. Okay, the biggest event that we are looking forward in 2024 is the general elections and also the central bank movements. How the central banks are going to make their efforts to control inflation or give a chance to enormous chance to growth. That is in terms of the rate cuts are concerned. So these are the two major events we look forward to for 2024, but also have an eye on the oil prices. That also uh, joker in the pack, extremely important for an economy like India. What we can sense, Shreya's going forward for 2024 is how the earnings revival, that is extremely crucial. We have witnessed a fabulous rally in the market. At the same point of time, the corporate earning revival, the earnings growth also, we need to witness in the company earnings. That's where we need to see. We have a beautiful set of numbers. We can see the tax collection data, GST data, all set of the growth, everything is fantastic. That has to translate ultimately into the balance sheet, that is the profitability, corporate profitability. That is extremely crucial. We need to gauge in 2024.